It's an enormous, shocking, successful program. There's some concepts that really help along the way. First being doing exactly the homework that's assigned and really doing the thorough back testing to change the belief structure of even what is possible, but also to change your belief structure of how to trade. I didn't really have a background in trading at all. Do exactly what Mark and Chuck say to a T. If you try to stray from that, or if you try to come up with your wild ideas, it's not going to work nearly as well as it's supposed to. For me, that was a little bit of a struggle, and that's another reason why the back testing and the homework really come into play. If you don't do what they say, you're going to screw up the strategy.
You saw Joe's testimonial. Now let's actually show you one of Joe's trades. This is a trade that Joe made in Abercrombie & Fitch, and it's what he learned in Mark's short-term trading class. Slow reads is a foundational piece of Mark's short-term trading class. Mark's short-term trading class is one of the best trading classes in the world. He only takes a handful of people into it every year, and in order for you to be considered for it, you must have taken both market timing classes, stock market timing and stock market timing masterclass, and both slow reads classes, slow reads workshop and slow reads masterclass. You must have done all the homework, and you must demonstrate that you are proficient both in market timing and slow reads. Because in the short-term trading class, you're going to utilize both classes, both methods, to be able to make trades that you cannot believe. So let's look at Joe's trade in Abercrombie & Fitch. Joe went long intraday on November 21st at 66.90 with the 65.50 stop, taking $1.40 in risk. This price is going to be slightly off, but you'll get the idea. He went long at 66.90 intraday inside this bar with a 66.50 stop. Now, he was able to peel half of this position at 2 times his risk the same day. So he took half of it off at 69.70. And then that essentially made this trade at the minimum break even, if not profitable for him. And then he let it run. On December 5th, he put on another position, going long at 76.64 with a 75.59 stop, risking $1.05. Again, the price is a little bit off, but you'll get the idea. So he went long at 76.64 with a 75.59 stop intraday. He was able to peel half the position at 2R the next day at 78.72, and then again he let the rest run. So let's look at what he did here. He's actually doing a pyramid. So he put on one unit, got that unit paid for, so he had no risk in it. And then when another opportunity set up, he put on another unit. And as soon as he could get that paid for, he peeled that off as well. So if you look at what he's doing, he's never had more than his initial risk, his 1R initial risk, at risk at any point. He had 1R of risk on initially when he entered on November 21st, but he quickly got that paid for. And then on December 5th, he did the same thing. He put on 1R of risk. His original trade's a winner, so he's up money. So now he's just spending money that he's already made on the second unit, takes $1.05 risk, and then very quickly gets that paid for as well. Now he's got 2 units on, and he's just going to let these units run. You can see this trade is just continuing to run higher and higher. Never is this trade ever in danger of going negative. He's periodically hedging this up using options throughout the life of the trade. And here on July 17th, he exits the entire position at 155.78, realizing a profit of 59.42R. net of his option hedges. So he never had more than 1R risk on. He was able to take some of the money he made and spend another unit, quickly get that paid for, and let it run. And then periodically throughout the trade, he's hedging it to make sure that if Abercrombie & Fitch rolls over, something like it does here or something like in here, he's fine. Very low stress trade. Once he got it on, it was a very low management trade. There was very little he had to do. He was in this position for 9 months, and outside of the initial day or two, the management of it was incredibly easy, very hands-off. This approach is like none that you'll see like it out there. But for you to be able to do this, you're going to have to take slow reads, and you're going to have to learn how to do it. And guess what? You can make a lot of money trading slow reads in the interim, just like with the trade that we showed you with Chris.